Okay, so what is going on with the market right now? On one hand, we're seeing record highs. A new peak almost every single week. But if you look just under the surface, there's this storm of geopolitical tension just brewing. And you know what? These two massive forces, they are on a collision course. So let's break it down, figure out what's really happening, and what it all means for the week ahead.
Just take a look at this number for a second. 6,791. The S&P 500 just completely smashed through another all-time high. That is a massive milestone. And yeah, investors are celebrating. But as you're about to see, these headline numbers, they really don't tell the whole story.
And this is really the core paradox we're all trying to figure out right now. We've got record highs clashing head-on with these rising tensions. On one hand, you feel this incredible optimism, but on the other, there's this feeling that the ground underneath us is getting, increasingly shaky. It really is an uneasy peak.
And it's not just one index either. This rally is pretty broad. The Dow Jones blew past 47,000, and the tech-heavy Nasdaq, it surged too. So yeah, on the surface, the market looks incredibly strong pretty much across the board.
But, and this is a big but, just beneath that shiny surface, there are some serious warning signs. Just last week, we saw what some people are calling a momentum meltdown. So what does that even mean? Well, essentially, some of the riskiest, most volatile stocks shot up like a rocket, only to crash right back down. That kind of extreme swing, man, that is a classic sign of some major volatility. And it kind of tells you that not all investors are feeling so confident.
So what in the world is strong enough to overpower those fears? Well, the first major driver is the absolutely incredible power of big tech, and it's being fueled by two things: AI and massive, massive earnings. Which brings us to the big question, right? What is the engine behind this historic run, especially with so much uncertainty in the air? It really boils down to two key factors. So there are two primary fuels in the tank. First, you have this just unbelievable excitement around artificial intelligence. It feels like it's transforming literally every industry. And second, we are heading right into what you could call a super earnings week, where the biggest tech companies on the entire planet are all set to report their results.
And just look at the scale of these expectations. We are talking about double-digit growth in both revenue and earnings for giants like Microsoft, Meta, and Amazon. Now, to put that into perspective for you, these 5 companies are so massive that their performance alone has the power to pull the entire market higher. It's like their success becomes everyone's success.
And if you want to see the AI effect in action, just look at Microsoft. Wall Street is expecting its Azure cloud platform to grow by a staggering 38%. Why? Simple. That's where the nuts and bolts, the infrastructure for this whole AI revolution is being built, and the demand for it is just immense. But hey, the tech boom is only half the story. The second major force pushing this rally isn't coming out of Silicon Valley, but from Washington, D.C. It's all about the Federal Reserve and what they're going to do next about inflation. So check this out. Here's the chain reaction that has gotten investors so excited. First, that recent inflation data, it came in cooler than expected. Whew! So right away, those big fears of runaway prices start to fade. Because of that, the market now believes the Federal Reserve has the green light to finally start cutting interest rates. And for the stock market, you got to understand, cheaper borrowing is like pure rocket fuel.
And here's the crucial point. The market isn't just hoping for a rate cut anymore, it's fully expecting it. The consensus is for a quarter-point cut, that's 25 basis points in finance speak, at the Fed's big meeting next week. It's pretty much baked in at this point.
But here's the wild card, the thing that could just throw a wrench in everything. Even with monster tech earnings and a friendly Fed, there's a massive geopolitical event on the horizon that could derail this whole thing.
So the billion-dollar question is, could this incredible rally come to a screeching halt? Well, all eyes are now turning to the upcoming APEC summit, and more specifically, a critical meeting between the presidents of the US and China. This timeline really shows you just how high the stakes are. On October 31st, the two leaders meet. The very next day, November 1st, is the deadline for a new, massive round of US tariffs to hit China. So you can imagine the market is desperately, desperately hoping for a deal, or at the very least a truce to kick those tariffs down the road. And this really boils the whole conflict down to a high-stakes standoff. The US is threatening a massive, and I mean massive, 100% tariff. In response, China is tightening its grip on critical materials, stuff we need for EVs and all our electronics. It's basically a reminder to the world that it has some powerful economic leverage of its own. So, this all brings us to a really dramatic climax. Next week isn't just another week on the calendar. It's a moment where these powerful forces of technology, economics, and geopolitics are all set to collide.
Okay, so let's recap the three massive forces that are all converging at once. You have the world's biggest tech companies reporting what everyone expects to be blockbuster earnings. You have the Federal Reserve, who looks poised to cut interest rates. And you have this make-or-break trade summit between the world's two largest economies. And all of this is happening in the span of just a few days.
So this leaves us with one final, absolutely critical question. We have three powerful tailwinds pushing this market higher: a roaring AI boom, a promised Fed rate cut, and the hope of a trade truce. For this record-breaking market run to keep going, all three of those things might need to align perfectly. If any one of them fails, it could bring the whole thing tumbling down. The question isn't if volatility will hit, but when. And we might just get our answer next week.